For Global Business Update, Michael Wilson now joins us from London. Great to have you, Michael. Morning.
Good morning. Good morning. Yes. So, the surprise news this morning is the OPEC Plus oil cut, which I'll come on to the detail of that slightly later. So that's meant that oil prices surged, as you'd expect, quite naturally. Some analysts are saying $100 a barrel before not too long. However, I'll come on to that. Thus, the Asian market's a little mixed, quite honestly, as they normally are when they're trying to work out where things are going. China factory orders really down very, very slightly. Weak demand still from China, and Japan also. Its business future actions, its PMI, Purchasing Managers Index, slightly softer, but it's harder than it was in February. It's 49.2 now. In February, it was 47. So, in other words, just slightly soft, but still slightly increasing as well. Let's go to China first of all, then detail. Li Auto deliveries up 66%, beating its rivals XPeng and NIO. XPeng up 47%, NIO up 20%. The World Bank says the China economy, for what it's worth, is not in a full-blooded recovery, but it is recovering significantly. And Huawei is now saying that the US ban will cause China itself to increase semiconductor production. So it says that, in effect, what Huawei is saying is it's growing a different kind of economy despite the US sanctions. So that OPEC cut then, oil prices up about 8% on that. Great surprise, OPEC Plus. It started apparently with on the way it says on the back of in the recent report. I'm assuming that means started with a 500,000 barrel a day cut by the Russians. Saudi is cutting 300. UAE is cutting 144,000 barrels a day. They're joining Kuwait, Oman, Iraq, Algeria, and Kazakhstan as members who are cutting production. Thus, a large increase. And again, that analyst prediction of $100 barrel of oil fairly soon, but very, very unexpected. Seems to have started off with Russia. Pretty obviously, Russia wanting to get more money for the oil it manages to export to wherever it manages to export it to. As far as the United States is concerned, welcome to the first trading day, really, as far as the second quarter is concerned. Tech is supported by Microsoft and Apple, and thus the NASDAQ, although the futures are off very, very slightly, it's felt as though this will be a good season for it. Again, very, very great contrast to what's happening last week when growth tech stocks were not very fashionable, but now they appear to be. It's quite a big week for jobs. Obviously, the non-farm payrolls at the end of the week. We're going to hear from the FOMC. We'll get a flavour of their thinking from the minute. McDonald's is just this some breaking news. Starting to tell its employees it's reported to work from home Monday to Wednesday this week, whilst it prepares its numbers of job cuts. That's just a report, though, not confirmed at the moment. Tesla hitting records again, 422,000 deliveries. Now, what Tesla does not do is tell people what its sales targets or its sales achievements actually are. But this 422,000 deliveries is a figure from an independent observer, and they're saying that this is actually right. So an incredible 36% increase, and the share price up 60% year on year in quarter one. To the United Kingdom, first of all, and there is a feeling that the government is actually imposing what's described as a sort of black box way of dealing. And Oliver Dowden, this is him here, Cabinet Office Minister, is saying that if there are any kind of security concerns about investments and companies moving to the UK, or indeed moving from the UK, then the decision about them will be made much more transparent than it is at the moment, because it's feeling that this lack of transparency is causing people not to invest in the UK. Now, Joe Biden is going to visit Northern Ireland. He's going to visit on the 25th anniversary of the Good Friday peace agreement, and he's being asked by the Northern Ireland's First Minister designate. She's a Sinn Féin politician, Michelle O'Neill, and she's asking that, therefore, as a result of this and a result of the Windsor Agreement, then the United States should accompany, as it were, with Biden and bring a bigger investment into Northern Ireland. We'll see. So he may have something to say there. And the passport office strikes begin today. The demand for passports is naturally increasing because people are going away on holiday. But the Home Office is saying that as far as approving passports are concerned, the usual 10-week wait is not being extended by them. So they're being relatively cool about the effects of the strike. We shall see about that. So oil then, as I said, first of all, that's a surprise OPEC plus cut. Futures up about 8%, both for Brent and WTI, and that starts in May and will extend until the end of this year, until the end of 2023. And keep an eye, ladies and gentlemen, keep an eye on copper. Copper is one of those kind of indicators. Very low stockpiles at the moment, could get into record territory fairly soon, particularly if demand in China picks up. That is something which the commodity markets are full of right now. It's currently at 9,000 a ton. It's up 30% year on year, and it could rise to record levels fairly soon. You have been warned, or we have been informed.
All right. Thank you so much for all the insights. I'd like to dial back a bit to the way the world is handling inflation. And I asked a question earlier on, that does this have to be the way alone, which is the textbook way of raising interest rates and all of that? And I say that because all of the palliatives now being put in place to be able to fight inflation is beginning to have a ricochet effect in the world. Apart from the banking crisis, is the fact that core inflation on most parts of the world is still pretty much high. And the benchmark rates are set by the central banks of most of these nations of the world. They've not been able to nip inflation in the bud. So when you take a cursory look of where we were last year and today, in fact, it's gotten worse. Are we clueless?
Well, I would say that really central banks don't have any other weapons. We've discussed this many times before, haven't we? Apart from interest rates. I mean, that's what they do. That's their monetary objective. Now, whether that 2% target that most people appear to have landed on a few years ago is actually still appropriate these days, don't know. It may be, but please remember that the inflation numbers are monitoring the rise of prices. So in other words, when prices stop rising, but they're still high, then inflation falls. So really, I've never really understood why it's a great indicator. All it does is, as far as banks are concerned, they're very quick to put up rates to borrowers and not as quick to put up rates to savers when interest rates are rising. But really, inflation is a problem, and it does require sitting on. I'm old enough to remember when inflation was running rampant in this country. It was 19%. I mean, can you imagine what that means? And we're not talking Zimbabwe or Venezuela yet, but certainly 30 or 40 years ago, when it was reaching those kind of levels, it was incredibly difficult to even get a mortgage because interest rates were just so high. They actually did come down. So what I think the central authorities are working towards is let's deal with inflation. Again, it's a very inexact and it's a very clumsy way of doing it. Let's deal with that first of all, and then we'll deal with growth. I think that's what they're thinking right now. Of course, unfortunately, inflation happens all the way around the world. I mean, it's just a fact of life, unfortunately.
Well, the voluntary cuts by OPEC Plus, I can understand Russia saying it's extending its 500,000 barrels per day cut. But for the other countries, for Saudi Arabia, why the urgency? Because nobody probably saw this coming. And we've been told that this is going to deepen tensions between Washington and Riyadh as a result of a previous understanding between the US and Saudi Arabia. And then the second issue, Elon Musk has been throwing a volley of insults in the direction of the New York Times, simply because the company says we don't need gold verification for the company. We don't need blue verification for journalists who use Twitter, except maybe for reportorial purposes. And Elon Musk has gone on an overdrive, abusing New York Times. Is it by force? Is it compulsory that people should seek Twitter verification?
Look, Elon Musk can do what he likes in the same way that the New York Times can do what it likes. It's a very strange newspaper, staffed, as said, by a very anti-capitalist group of people, a lot of whom are British, which is rather weird as well. And they certainly don't like the UK, and they certainly will not like what Elon Musk is doing. Whether that ties in, whichever way he goes, he seems to make headlines. Quite honestly, what I want to see, as far as Twitter is concerned, I don't care about the labeling system. I think most investors want to see, what is the business model? It's quite simple. What is it? Where is it going? And unfortunately, we can't see. As far as the oil's concerned, join the club as far as the mystification is concerned. Yes, I looked at that and I wondered why on earth Saudi. Let me just go back to the figures, because I do actually dig them out. Yes, Saudi is Russia, first of all, trimming by 500,000 a day. Saudi trimming by 300,000 a day. I wasn't aware there was an agreement between Saudi and the United States, incidentally. I thought that Biden's visit to Riyadh fell on deaf ears as far as Saudi was concerned, but you may know more about that than I do. But I am completely mystified by this, as I think most people are. I can see why Russia wants to do it, and I can see why the others, this is Kuwait, Oman, Iraq, Algeria and Kazakhstan, kind of join in as well. Sure, they do. But, and Saudi is seen as a linchpin of this. I can see why Russia's doing it, but why Saudi is doing it, I simply do not know. It looks completely strange. And they can talk about the $100 barrel of oil, but I would say that demand destruction starts to come in at that kind of level, and people will not. I predict that people will not be happy if it rises much above that. They'll just simply cut back. The Saudis say they did it for some kind of stabilization of the oil market. How on earth that fits in with what's actually happening, as I understand it this morning, where prices are 8%, both of Brent and WTI, mystifies me as well. I do not know.
Well, thank you very much, Michael. Now for business updates across the African continent, Rotus Odiri joins us. Good morning, Rotus.
Good morning, Doctor. Good morning, Rufai. Good morning to all our viewers. We begin with the NSIA, the Nigerian Sovereign Investment Authority. If you remember, back in 2011, they were mandated by the NSIA Act, May 2011, to act as Nigeria's fund manager. So pretty much the Act, empowers them to essentially invest anything above benchmark crude in different securities around the world. Unfortunately, they had a rough 2022. Total assets down 15% year on year to 1 trillion naira. Their income from investing and everything else, 111 billion, down 28%. Profit for the year down 33.35. Why is that? Well, pretty much language that you've become used to hearing about 2022. If you take a look at a couple quotes in their financial statements that we dug up, essentially saying the 2022 fiscal year was marked by unprecedented shocks, such as the COVID-19 lockdown in China, Russia-Ukraine conflict, food energy crisis, supply chain disruptions. They also mentioned, of course, rising interest rates. If you mark-to-market your bonds, as you've seen with SVB and other people, you're going to suffer some losses. There was also soaring inflation and monetary policy tightening, which precipitously impacted the global financial market. So, that's something that a lot of other folks who are investing in 2022 were impacted by, and the NSIA was no different. We go to oil and gas. Century Group, which is an energy infrastructure company, has collaborated with Energy Link Malta to pretty much beef up maintenance on the Eliakaso floating storage and offloading terminal, which is at OML 18. It's called spread mooring completion. And from what I understand, spread mooring are these anchors that hold the stern and bow of these floating vessels to the seabed in order to evacuate crude. This is part of the OML 18's alternative crude oil evacuation system OML 18, as you know, south of Port Harcourt, about 1,000 square miles, and has a number of oil assets there. So there have been some issues with respect to oil theft and also infrastructure. Evacuating crude from there has been difficult using the pipelines. Energy Link was contracted to do this. They then subcontracted to Century Group, which is indigenous Nigerian firm that is part of the quest to improve oil production and oil output. So they're saying that spread mooring infrastructure will be completed, I believe, by April the 10th. So we'll hopefully get a further announcement from them when that happens. So again, more in terms of getting our oil and gas assets. And in fact, on the masthead of today's This Day newspaper, I think there was a Reuters poll talking about how oil production for, was it February or March, improved to like 1.6 million barrels per day. To banking. Now, we are starting to see the impact of Ghana's debt restructuring on a number of African banks across the continent. And they're taking hits. I guess if you remember the restructuring where they basically said that you'll take a haircut because Ghana's fiscal issues did not allow them to be able to pay their debt. So on their bonds and other securities, if you are holding those bonds, if you mark to market, you're basically losing some money because they're not able to pay back. So if you take a look at some, starting with Zenith, which released their earnings last week, if you look at what's highlighted, this was a statement that Zenith released to the NGX. In yellow, the debt restructuring program in Ghana resulted in a very significant impairment expense for our Ghana subsidiary. Consequently, impairments grew by 106% from 59 billion to 123 billion naira, which also resulted in an increase in cost of risk from 1.9% in 2021 to 3.2% in the fiscal year. So that's the hit that they took. And if we whittle through a number of other banks, it wasn't just them. So that's basically Zenith Bank, their Ghana impairment 123. You go to Echo Bank, which releases their results in dollars. They had 170 million impairment, much of which impacted by what we saw in Ghana. You go to UBA. UBA had impressive results. In fact, by the way, Zenith Bank's results were good. Echo Bank's results were good. UBA's results were good. But this is just looking at the impact that the Ghana restructuring had on them. They took a 17.3 billion hit. They needed the South, number of 4 of the biggest lenders on the African continent. Standard Bank, First Rand, Absa Group, Nedbank. They took collectively 4.8 billion rand, which is about $267 million on their own impairment with respect to the hits that they took from the Ghana restructuring. And then here's an interesting tweet that I saw online. Imagine being insulated from the US-European banking crisis only to be getting hits in nearby Ghana. And that's our Africa business.
But that's the reality of what you face. And I think who puts it better now? Very great guy. I had a chance to listen to him speak once. Yanis Varoufakis, the former Greek finance minister.
Greece,
very, hunky guy, fit guy, works out a lot, rides a power bike.
Yeah.
And he wrote a very interesting book. And he says, the weak must suffer what they must. And that book is very instructive. And that book was after the crisis in Greece, the economic crisis and all of that. And when he came into power, being the finance minister of Greece. And that's what Ghana is suffering, and that's what the banks are suffering. All right? When Ghana had their problems, they didn't fix it when they ought to fix it. There was a lot of spending as regards governmental spending they couldn't account for. Also, there were a lot of shady business practices. So take, for instance, the blessing of Ghana became a curse.
Yep.
And this was one of the major factors that led to all of this, not the entire factor, apart from the economic crisis everywhere in the world. The fact that their oil fields was surrounded in shady business dealings.
Yeah.
And the Ghanaian government had to buy back most of those licenses. And they had to dole out a lot of cash, billions, to be able to buy back most of those licenses.
Yeah.
And that also deepened the financial black hole in their ports, coupled with, not spending with accountability and other things that happen, and the credit crisis and all of that. And when Bloomberg first ticked them off, they dismissed Bloomberg. But
they attacked the analysts that said
attacked the analysts,
but
Bloomberg was right.
Yeah.
And now they're taking a haircut on this impairment. But let's see how all of this balances out. Ken Oforiatta has a very big work on his part. As regards the oil sector, I'm really very excited, because Mr. Wabote will always talk about local content every time. And I think the fulcrum of that story is the capacity that we've been able to
Century Group, right?
Yeah, Century Group is we're able to grow local content.
Yeah.
And you see, I saw some things I was really excited about when we had the Christmas wellhead burst out at the oil spill,
Yeah.
that happened some time ago. It was a Nigerian group that was able to cap that. That's local content. And when you look at the work that has been done as regards to local content, to deepen local content, that's only the way to go. Because for a very long while, it stalled.
Yeah.
Because we had training institutes not churning out people as much as, that had that level of requisite competence. PTI, Petroleum Training Institute in the forum, used to be known for that.
Yeah.
The best of welders, the best of artisans in the industry. And, you also having a university set up around Obromo, to be able to churn out those people. So I'm happy that we're beginning to have those flashes of local content. And I think once the percentage of local content improves, then we can create a job for all those artists in the oil and gas sector. And we can truly power our sector. So this is a good one.
Yeah, yeah.
Well, the contagion that you described, with regard to the situation in Ghana. Ghana is facing a very serious fiscal crisis. And that's why Ghana has gone to the IMF to look for a $3 billion bailout.
Yeah.
And IMF, is already giving them conditions that they have to follow. But the concern in Africa is not just Ghana. Other countries too are in similar dire straits.
Yeah.
Look at Tanzania. Look at Zambia, and many of these other countries, even Kenya. And David Malpass, yesterday in a statement, that's the president of the World Bank, the outgoing president of the World Bank, pointed out that, look, African countries need to be careful how they go to some of these countries to go and collect loans.
Indeed.
And he specifically mentioned the example of China and the lack of transparency with loans that African countries take.
Yeah.
Now, it should also not be surprising that during this visit by Kamala Harris in the countries she visited, including Ghana and Tanzania, the Americans were talking about, providing financial support for many of these African countries. But the long run of it is how African leaders provide leadership, how they manage their own affairs. If you run your country aground, every sector will be affected.
Yeah.
You are talking about banks. No, it affects everybody.
Yeah.
So it becomes contagious. Now, the second issue that you raised is with the Nigeria Sovereign Investment Authority,
the NSIA. Yeah.
Where there is another report that says that the NSIA is doing well, and that by end of 2022, the authority recorded very positive, results.
Yeah.
So maybe there are two different types of reports out there. But the question I wanted to ask is, when Uche Oji was there as the head of the NSIA, I mean, he used to appear regularly
we had him,
on the channel.
Yes.
And he used to tell us a lot of positive stories. So what happened between the time he left and now? Could it be a change of leadership issue that we're dealing with here? Finally, before you joined us, we talked about OPEC.
Yes.
Announcing surprise output cuts.
Yes, that's right.
Right?
Yeah.
So I quickly checked the countries. Of course, I didn't see Nigeria there. Well, we can't even meet our quota.
So we can't cut.
So, but what do we stand to benefit from the cuts? It looks like oil price
have gone up.
Per barrel will go up.
But doctor,
but how do we gain from that?
Thank you. The oil theft infrastructure. So oil prices are up. We should get revenue, but our infrastructure is issue and oil theft. That's it.
Sad reality.
Thank you.
It is. Thank you so much. Thank you.